Welcome to Edison TV. I'm Catherine Thompson, Technology Analyst at Edison, and I'm here today with Miles Adcock, CEO, and Kim Garrod, CFO of Concurrent Technologies. Concurrent is an AIM-listed designer and manufacturer of high-performance embedded computing solutions for use in critical applications across various industries. Welcome, Miles.
Good morning.
Just to kick off, do you think you could give us a brief intro to the business?
Yes, we're 40 years young this year, and we've spent 40 years taking Intel processors and designing the rest of the printed circuit board that turns that Intel processor into a highly capable computer. Our computers are fairly small, postcard sized typically, but they deliver some of the most powerful computing solutions in the world, typically defense, but not always defense.
And you joined the business in June 2021 and instigated a strategic review then. Since then, financial performance has significantly improved and kind of more so recently. Could you talk us through the steps that you took and kind of what you've seen change in the market over that time?
Yeah, the business was run very much as a small business, run really from inside the head of its leader, who had successfully run the business for 36 years. What I found when I joined is that our products were very late to market, to the point that we really had little market left to serve. Indeed, in 2021, 80% of our order intake was for last-time buy orders from customers. So that's a business running out of road quite rapidly. So that prompted me to fundamentally redesign how that business works, with the absolute focus on how do we get product to market as early as possible. So I'm pleased to say in 2022, 1 year later, 80% of our order intake was now for new and current products, and we've been very good since then at being very early to market with our products, which is a game changer for this business. If you're first to market with the latest technology, you have no other competitors. And if we get designed into a customer solution, we can be in that program with that customer for maybe 10 years. So if you're early to market, get designed in, you can enjoy up to 10 years revenue from a customer. We're doing very well at securing that sort of work. That's where our growth is really coming from. 80% of people in this business started after I did. So as a metric for transformation, that's quite potent.
And looking specifically at your recent performance, in your products business, you had significant success in FY24. So, in terms of design win activity, order intake and profitability. Can you talk us about what's helped you to achieve this and also your competitive environment?
Yeah, a really important thing in the market that has happened for us is about 5 years ago, the DoD in America, and the rest of the world follows America in the end on technology. The DoD said, we have had enough of being locked into suppliers because they use their own proprietary architectures, like a connector. I think if you're in the Apple ecosystem, it's actually quite difficult to leave. And they said, we will agree open standards so that we have a level playing field so that anyone can compete for work. That's a huge opportunity to us. Our competitors are largely very big American corporates, maybe $1 billion or $3 billion in size. They've had their customers locked into them for actually decades, and now they can't do that. So for them, that's a big risk. Much of the work we're winning is displacing people like that. For us, that's a huge opportunity in the market. That combined with being as early as possible, first often now, to market with latest technology, means customers are really compelled to want to work with us.
So can you tell us about your approach to technology innovation? In particular, your Kratos solution seems to be popular. Can you talk us through how you develop your technology roadmap?
Yes, so we enjoy something called titanium partnership status with Intel, which is very hard to get, which means that we get visibility of their products in detail 6 months or more ahead of the rest of the market. Our large competitors are also titanium partner, I'm sure, but nonetheless, that's a very important thing. So we work hand in glove with Intel, understanding their roadmap so that we can develop our roadmap alongside theirs. And we work very closely with key customers so that we can understand what their requirements are likely to be in 1, 2, 5, even 10 years' time. And we bring together Intel's roadmap with the needs of our customers to create then our own product roadmap path. So I know what products we will likely be designing for the next 5 years, actually. We then have an extremely competent engineering and design team in the UK and a very strong customer support team. And those teams work together then on really fine-tuning that product roadmap. And we will always have a lead customer in mind for our latest products. Kratos is fantastic. We launched Kratos in March. There is still not a competitor product to that product in the marketplace. We are the only company to, at the moment, be using that latest generation of Intel processor in a computer of this type. And indeed, earlier this year at the Global Embedded Computing Show, which is a very large show for this industry, on the Intel stand, our product was the one they featured because we are so early to market using their latest chipset.
And can you talk about why you decided to expand into the systems business and kind of what you see the potential is there?
Yeah, so these computer cards that we design and make in the UK, they slot into quite complicated boxes alongside other cards that do other things, graphics, storage, switches, things called FPGAs. And that box we call a system. So by now also offering systems, several things happen. We increase the market access for our cards, because if we're delivering cards into our own systems, that's more opportunity. Systems are almost always custom solutions for customers. So it's a much more intimate dialogue with customers if you're delivering a system to them. So you get locked into their roadmap much more fully than if you just do the cards. And of course, the selling price for a system can be 10 or 20 times that of a card. So, a system might be 150, 300,000 pounds per unit.
And in terms of acquisition activity, what types of business would you consider? What do they need to bring to Concurrent?
Yeah, we have said we are acquisitive, and there's two kinds of company that we are looking at. It'll either be a company that provides technology that is already inside the box that we call a system, so increasing our share of the content of the system, or it will be a company that does very similar technologies to us, but let's say nearby. So our products, for example, tend to be a particular physical size. You can also buy in defense rack mount servers, Intel rack mount servers, which are physically much larger computers, or you can buy things called small form factor computers, which are tiny. Again, dominated by Intel, it would broaden our capability. And companies like that, there's quite a few of them around, particularly in the United States, often founder-owned, and they typically don't have Intel titanium status. They typically don't have global sales. And so right from day one, if we find the right organization, we would aim to add value with the capabilities that we can bring.
Thanks, Miles. And I think now we'll go over to Kim. So Kim, could you tell us about expanding defence budgets and what they mean for Concurrent?
So expanding defence budgets are great, but they actually expand really, really slowly. There's lots of rhetoric around what's going to be spent in defence budgets. And actually more important for Concurrent is what's happening underneath those defence budgets. So upgrades, electronic upgrades, has become a really key part of the defence market at the moment, because in order to get new technology into your platforms really quickly, the best way to do that is through upgrades, not through building new platforms. And that's very important to us. So it's more about market share for Concurrent, not the growth in defence budgets.
And could you talk us through the cycle from designing through to production, and also how you expect recent design wins to kind of drop through into revenue?
Absolutely. So we've openly said in the last 2 years, we've won 18 major design wins. I think it was 8 in 23, 10 in 24. Major design win is anything that generates over £1 million per year revenue. The cycle is very long. And it starts before the design win. So the cycle starts from the point that a customer comes to us, they have a particular need, they will use our products to evaluate whether they're suitable for that need. So we sell them a few boards, which will be called evaluation boards. They will take some time in using those evaluation boards into their program, see if they work, if they're suitable. If they are, that's the point we get designed in. That can take in its own right 6 months to a year. Once we're designed in, an upgrade program has a lot of things around it. We're just a small part of that program. So the customer then has to go through a long qualification process. So we say a design win will take anything from 3 years to get to production levels. And production levels, they're not all linear. They will, they may start at a lower rate, building up to a full rate. These are big programs. So, we say anything up to 3 years for the production revenues to start. What it means for our revenue, which is really important, our design wins in 2023 really should start in 2026. All about timing, as we've discussed. And then 2024 start in 2027. So as you can see, we start to get that layering effect on top of our revenue over and above what we're doing today. It's really key to our future growth.
And you're planning to extend your manufacturing capacity. Can you talk me through kind of the timings, the cost, the kind of size you're expecting to expand to, and what that means for your revenue growth?
Absolutely. So we always said we're probably at a capacity of around £40 million at Colchester. It depends, of course, on mix of revenues. It could be a little bit more, a little bit less. We are obviously at that £40 million mark. Our facility in Colchester is very, very tight. We've run out of room, basically. We have looked at all the options, including staying at Colchester and coming up with some novel ideas to deal with the tightness there. But the solution we have gone with is we're going to move to another site in Essex. It will be double the capacity we have today in terms of size. So we're going from something around 20,000 square feet to 40,000 square feet. We will, at the same time as moving, we will be doubling our manufacturing capacity. So we will buy 2 new surface mount lines first, get them up and running our new facility, so we have revenue capacity going all the time whilst we're in that period of move. The move will happen in around the end of 2026. It is a brand new build, so as we know, all these things can slip, so I'd say late 26, early 27. We don't have an issue with capacity per se, because what we can do is if we get into 2026 and we're running out of capacity in our own factory, we can contract out. We can use contract manufacturers that do this all the time. It's really important for us to have our own factory because we want to have control over what we manufacture and when. And that's really important when you have an engineering and development section to your business.
Finally, could you outline your targets for the coming year and the medium term?
So Concurrent does not actually forecast in the market. Our brokers forecast, and at the moment the brokers forecast for 2025 is 43 million of revenue and 6 million of profit. And in the brokers forecast, you'll see quite an increase from that up to 57 million and just under 10 million profit in 2027. This is because 25 it's more a repeat of a normal year. So the growth is coming from us doing things better, starting to get some early design wins in there, a bit of production runs, etc., but very low rate, with a view that 26, 27 is when we start to see a kick up in revenue. We are comfortable with the forecast the brokers have in the market at the moment.
Great. Okay, well, thanks both of you for coming in.
Thank you.